Hello, crypto traders. Welcome back to another episode of Morpheus Crypto. In today's video, we highlight Litecoin, the 10th largest altcoin by market cap, which had a massive 25% gain back on June 30th when Bitcoin initially broke out. And since then, it's been pulling back and now is setting up for a potentially explosive swing trade setup on the pullback after forming a bullish reversal candle that just undercut its 20-day MA. So we'll take a look at that trade setup and how you may be able to capitalize and profit from that trade setup. We also will take a look at AVAX, which is a former market leader that may be setting up for trend reversal, as well as large cap DeFi cryptos, which we have been focused on over the past several weeks, as well as SXP. In our last video, we highlighted the bullish trade setup in SXP, which is still in play. We'll take an updated look at that. And of course, we'll take a look at the charts of Bitcoin and Ethereum to see what the crypto market may have in store in the coming days. First up, let's take a look at Bitcoin. In our last video, we highlighted this spinning top candlestick that formed on June 30th, which indicated a lot of indecision. Stops were run both on the upside and the downside with these long wicks. And since then, we had another one of those violent kind of reversal whipsaw movements on July 6th, where the price action again tried to break out above that 31,400 resistance level, only to meet sharp selling resistance. And that took the price action all the way back down to undercut the low of the range. And since then, the price action has been trading in a tight sideways range for the past 4 days near the low. Now, first of all, the consolidation pattern that Bitcoin has formed over the past 3 weeks is actually bullish because of the fact that we have a correction by time after a rally. So that consolidation pattern is actually healthy. However, you need to be aware of all the choppy whipsaw price action we've been seeing in the market. So this is likely to continue until we see a confirmed breakout, either above this 31,400 level or a breakdown, a convincing breakdown below this range. But until then, expect more continued choppy price action. Now, currently, we see that Bitcoin has fallen below both its 10 and 20-day moving averages, which are just above today's high. So on one hand, that's negative, but we often see what we call an undercut, which is just a one-day dip below the moving average and then run stops, and then the price goes back up. So Bitcoin's movement in the next 1 to 2 days here is very crucial, because we want to see that price action recover back above this 4-day high and back above the 20-day moving average. So keep an eye on the 30,500 level. If we get back above that, we could see bullish momentum return into Bitcoin. Until then, we need to be careful of a potential breakdown below the low of the consolidation. Now, when we see choppy price action in the market, it's often a good idea to zoom out to the longer term chart, which removes some of the noise. And if we look at the weekly chart here of Bitcoin, we see a bullish consolidation at the highs for the past 3 weeks, which is actually testing the highs of last April. So the daily chart is choppy, but the weekly chart shows a continued tight consolidation near the highs, which could lead to a breakout to new swing highs in Bitcoin soon. Taking a look at Ethereum as a proxy for the altcoin market, we see that it doesn't look quite as good as Bitcoin. In fact, Ethereum recently failed its breakout above the 1930 area. And we can see here last week, we only traded above that horizontal price resistance for a couple of days and fell back down. And just like Bitcoin, Ethereum is back below its 10 and 20-day moving averages, and it's already testing support of its 50-day MA. And you may recall that Bitcoin is actually still well above its 50-day MA. So Ethereum is in a tug of war right now between the bulls and bears, and we need to keep a close eye on it. A breakdown below the 1830 level would be a break of this horizontal support of the past 3 weeks, and that would be a break of the 50-day MA. So that could actually be a potential short setup if we get a breakdown below this level. On the other hand, we could just as easily pop back above this 4-day high, and if we get back above the 1900 level, then Ethereum could be off to the races again as well, although there is a lot of overhead supply and resistance from that failed breakout. So keep a close eye on Ethereum in the coming days. AVAX is a former market leader of the 2021 bull market. From July to December of 2021, rallied 1,000%, 10x. And since then, of course, it's been in a major correction, but it may be setting up now for a short-term trend reversal, and we really like the risk-reward in this setup. Over the weekend, AVAX popped above resistance of its consolidation base here, which also put it above its 50-day moving average. You can see here volume spiked to its highest buy-side volume in several months. Now, the next day, the initial breakout attempt did stall, However, what we like is that this pullback gives us a very good risk reward because we've got support of the 50-day moving average just below the current price, as well as the 10 and 20-day moving average converging just below. So if this trade does not work out, it's a nice clean stop right below the moving averages and we're out. But if it works out, we've got the potential to make 3 to 4 times our initial risk on this setup. So we like the AVAX here on this pullback to the 50-day MA, although we do need to be aware of the potential for a failed breakout if these moving averages don't hold, and that's what our stops are for. So AVAX a little bit early here on this entry, which is why we took small position size on the initial setup. And if the trade follows through to the upside, then we'll look to add to the position. The Compound is a leading large cap DeFi play. And we've been talking about this massive relative strength in the large cap DeFi since Comp rallied in late June, more than doubled in just over a week from around $28 up to over $68. And since then, it was in a light volume pullback. You can see we had 7 down days in a row, but notice the declining volume as the price action pulled back. And when we saw that pullback, since we saw that pullback starting, we've been keeping it on our radar for a potential buy setup for a quick pop. And that happened yesterday. July 9th in the chat room, we actually saw the breakout above the downtrend line and alerted our Morpheus Crypto members to that. If we zoom into the 4-hour chart, you can see here the reason for our call. We were looking for a breakout above this downtrend line from the high, and we got that on July 9th. You can see the big volume. So we alerted our members right around the $54.50 level to a potential buy setup in COMP. And it went on to rally nearly 20% that same day, all the way up to 62. And now it's forming another short-term consolidation. But pullback setups are one of our favorite types of setups after we get a big breakout. We wait for the pullback to support, such as an undercut of a moving average, such as the 10-day moving average, which gives us a lower risk entry point than chasing a breakout, especially given recent market conditions. But COMP is definitely a market leader that is buyable on pullbacks. Just wait for the low risk entry point on the pullback. Keep your stop in place if you're wrong. In addition to COMP, MKR and AAVE should also be on your radar for potential strength in the coming days. GRT is a leader of the AI sector, and on July 2nd, GRT had a massive volume breakout above its 50-day moving average and followed through the next day with another big rally. So we had a move from 10 cents to 14 cents, about a 40% move in just 2 days. You can see here the massive volume that confirmed the breakout, highest volume we've had in many months. And since then, we've been waiting for a low-risk pullback entry, which we got after the price pulled back to support of the 50-day moving average. And just today, we got an undercut of that 50-day and 20-day moving average convergence. Undercuts are bullish because they run stops and absorb overhead supply and enables us to see the price action move back up with less resistance. So right now, GRT is sitting right at support of its 50-day and 20-day moving average convergence. If you missed our original entry and you're not long yet, you could consider an entry here with a tight stop just below the low of the day, which is where our stop is. So again, we like the risk reward of this because with entry right here, we've got a 3 to 4 times greater potential reward, even on a test of the prior high, compared to the stop price just below the low. So with trade setups that we look for, it's not only about the potential gains, but it's about risk reward. How much do we have to risk for a stop compared to what the potential reward is on the upside? And GRT, we really like the risk reward because of this setup. So keep an eye on GRT for a potential resumption of the strength that we saw just about a week and a half ago. SXP was a massive leader just a few months ago, rallied 300% in just a week, and since then has been in correction mode. Now, when we looked at this setup, it had broken above its 50-day moving average on big volume. However, there was a lack of follow through initially, and it's been holding on to that 50 and 10, 20, and 50-day moving average convergence. Now, just today, the price action slipped below convergence of those 3 moving averages. But again, as we mentioned, this could be a bullish undercut setup if the price gets back above the 38-cent level. Back above the 38-cent level would put the price back above the 10, 20, and 50-day moving averages. And then we could see the buyers start to step in and see some follow through on this initial breakout attempt. Otherwise, we want to be out quickly if this low does not hold. So we've got our stop in place from this breakout entry in SXP. Finally, Litecoin. LTC was a massive leader on the June 30th breakout attempt in Bitcoin. And since then, it's been in pullback mode. And in our last video, we showed you how it was testing the 10-day moving average. That price action did not hold. However, we now see a undercut of the 20-day moving average, which is more significant support. And we see a bullish reversal candle forming here known as a hammer. And if the price gets back above this 20-day moving average at 95.41, then we could definitely see some nice follow through on a breakout attempt that takes the price action higher. Again, we like the risk reward of this setup because we can have a stop neatly placed just below the 50-day moving average here. So if it gets below that price, we definitely want to be out. But the potential upside is that we could easily see a rally back up to test the prior highs. We can also draw a trend line that shows support level of the prior lows from this June 14th low. We can see that we're still holding above the trend line support, even with today's low holding just above that trend line. So LTC looking really good. Nice setup, nice clean setup where we can have a stop neatly placed below the 50-day moving average in today's low with a potential test of the prior highs. Again, looking at about a 3 to 4 to 1 risk reward ratio in LTC. We sent a trade alert to Morpheus Crypto members this morning, notifying them of our trade entry into LTC. And Morpheus Crypto members should also note our exact stop price on this trade setup. That's a wrap for today's video. Don't forget to press that subscribe button and turn on the notification bell to be notified of our next video. Also, we appreciate you pressing the like button and dropping us a comment to let us know your thoughts on this video. And to learn more about the Morpheus Crypto service, please head over to morpheustrading.com and press the Crypto Picks link. Have a great day, and we'll talk to you again in our next video.